So I want to kick us off by saying welcome. Welcome to California Home Insurance 2025. Very exciting times we live in, right? So we know that California insurance has been tricky lately, and this event is really to help enlighten you, answer your questions, and see if we can bring some positivity to a sometimes tough situation for all of us living here in California. So I'd like to get started by introducing the experts here. Uh, Elbert Taylor, also known by friends as ET, is with Farmers Insurance and he covers the uh, residential side. And ET, do you want to say a little bit about yourself?
Yeah, if first off, thanks so much for everyone who registered and is going to join us on this call. So first of all, about myself, I've been in the insurance industry for more than 20 years. So when you've been in as long as I have, you just say 20 plus years. And our insurance agency is a full line insurance brokerage. And a lot of people don't realize that we do more than one thing. We do homes, we do cars, we do commercial buildings, we do habitational risks. And we do also life insurance and commercial and financial services. So we're a full line insurance brokerage. We're located in Noe Valley in San Francisco. We are a family run business. And my wife Lena, who keeps us all in charge, is the ringleader. Oftentimes she's the person that has direct contact with clients. And so she might be the first person you talk to, but we all work as a team to help take care of our clients.
Very good, thank you. And Jonathan Fong, you're also with Farmers on the commercial side. You want to say a little bit about yourself?
Yeah, thanks everybody for stopping by or joining us for the recording if you guys are watching after the fact. But yeah, just piggybacking off of what Albert said, I've been working in their office now, not 20 years yet, but more around like two. But we've had a lot of different clients, and I kind of joined the team in a very challenging part of the insurance industry when a lot of fires and everything we're kind of going through, and we can touch on how we've adapted to that later in the presentation. But I've personally done a lot of our habitational and trying to place our risk as kind of our markets within farmers has either paused or dwindled or gotten more strict. So we'll talk more about that later, but I'm glad to be here and happy to be part of the team.
Thank you so much for being here. And Lou Magallon is with Cornerstone First Mortgage. Do you want to say a little bit about yourself?
Thanks, Wendy.
Yeah.
My name is Lou Magallon. I'm with Cornerstone First Mortgage. I'm a senior mortgage consultant, and I'll follow up with, as Albert said, I've been in the business 20 plus years. I've owned a brokerage, and I've also worked a little over 10 years at a private bank for one of the major lenders here in the United States. Currently, I cover residential mortgages in the state of California. I've seen many different markets over my tenure in similar situations with insurance in the past. And I've worked with every type of borrower, from purchase loans to refinance to home equity lines of credit. And I'm here today to or share my experience with anyone that has questions. So thank you, Wendy.
Great. Thank you very much. And I'm Wendy Newman. I'm with Wesley and Associates. It's a little co-op brokerage for Northern California. And real estate was a pandemic pivot for me. Prior to that, I was a serial entrepreneur. So I've been around the housing markets in all of my career uh, for, let's just say, what did we say, ET? 20 plus years. But I'm really delighted to be here. What might bring a little extra spice to my knowledge is I sell in the two areas I live. I live in two different cities. So I live in San Francisco and primary focus is San Francisco, but I also have a second home up in the Sierra foothills in Grass Valley, Nevada City area. So I have the no fire zone and absolute fire zone in the insurance knowledge bank here. So excited to hear what everybody has to say, as I know you do, and how this is going to go is we're going to talk about what's happening in 2025 with insurance and what homeowners can do to make things go well for them. and then answer any of the questions that you have. I'm going to kick us off with a couple of questions for our experts, but please feel free to put your questions in the chat and we will get to those along the way. Okay, so my first question, I'll let ET start us off, but please pass this question around, right? So what do we need to know today with all of the changes that have happened? Because for a minute there, it looked like insurance companies were going away, and then all of a sudden, poof, they're back. So what does that mean to us?
Yeah, so if you just listen to the news, we're bombarded by negativity of, you hear every day we're hearing one crisis after the next. This morning, oh, fire season's back. Oh my God, what's that going to do in insurance? You hear a lot about State Farm and things like that. The good news is farmers in particular, and I'm not here to represent farmers insurance. I'm a farmers broker, but I don't represent, I'm not a farmer spokesperson. But farmers is 100% fully open for business. We're writing business all over the state. There are some restrictions in certain areas, but we generally have a policy. If it's not with farmers fully, we have a policy for everybody. And farmers just recently opened up our landlords policies, our condos, and renters policies. And what I'm finding in the market is that even when I don't have a policy that would fit for farmers, I'm able to find that with some of our other carriers that we work with through our wholesalers and so forth. So I think there's more availability based on some of the things the Department of Insurance has done than it was last year. Jonathan could maybe speak to sort of what he's seeing as well.
Yeah, so just to piggyback off of that, a big kind of market that I've been working on tackling is our habitational kind of commercial side. So whether that be our apartments, our HOAs, TICs, et cetera, a big thing that kind of happened over the last, I would say, a couple of years or so is that the increased risk in California as a whole has made insurance carriers either withdraw from the state or impose very strict requirements. The main requirement that kind of pertains to the Bay Area is that, at least for farmers, for our commercial risk, we had no plans of ever withdrawing from the state, as some carriers did, but they did require all of our apartment buildings to be at least built within the last 50 years. And I'm sure most of you know that that's, very uncommon and very rare in the Bay Area. So that had made us had to kind of pivot towards our, like ET mentioned, our broker partners, our in-house brokerage. We have great partners in there, and when things don't fit necessarily within our brokerage in-house, we also have appointments with wholesalers, and we're able to shop various markets within our wheelhouse and under our broker hat to find adequate coverage for our clients. So we've been navigating and adapting to as the insurance industry has changed, and moving forward, things are opening up. We still have those restrictions and those requirements, but as we kind of pivot and kind of get through this, we kind of have more options and able to adapt a lot easier than we were a couple years ago.
Yeah, and
Jonathan, I have a
just one follow-up with Jonathan.
Mhm.
What he was saying is through our wholesalers, we're not just getting surplus lines quotes. Through our in-house, we're getting admitted carriers, which means that pricing is going to be much, much better.
Hmm.
That's great. And I had a follow-up question for Jonathan. Can you share a little bit about the distinction of TIC and why that can be trickier?
Yeah, so for the TICs, what we do find is in terms of insurance, I know the ownership is a little bit different from TICs to HOAs, but in terms of insurance, the way we rate it and the way we submit it on our application, it's very similar to an HOA policy in terms of a master policy where it will cover the according to the CC&Rs and as well as your TIC agreement in terms of what your kind of insurance kind of guidelines you guys the association has in place. It's to ensure the main building as well as the common areas. In some cases, for our TICs and for our HOAs, they do have walls in included, and that's very important as to why when if you guys want to reach out for quotes, it's very important that we get a copy of those CC&Rs and TIC agreements because that language is very important in terms of claim payouts. All of our claim adjusters will pay out based on the language of their CCNRs and TIC agreement. So that's kind of the biggest difference between the two. I know ownership is, but in terms of insurance and where we rate it, they are rated very similarly, if not the same in our experience. Um, but the main difference between these two is just if we have walls in coverage or not. But between an HOA and a TIC, there's not much of a rating difference between the two.
Great. Thank you very much.
I'd like to hear just from Lou, what are you seeing when you're reaching out for insurance for this type of risk or during financing or trying to get availability?
Well, I think, the number one thing that I'm seeing, and it's the reason that we're here today, is that this topic is not top of mind for buyers, sellers in general. And so what happens is there's a last minute scurry to go find coverage. And oftentimes, the first point of contact is not necessarily the one that's going to be able to provide that service. Jonathan was talking about CCNRs. Those alone sometimes, and Wendy can attest, can be very difficult to obtain. And if you're in the middle of a purchase contract and you've got X amount of days to close and it takes Y days to gather that information, that can kill the deal or delay it significantly. So we're seeing that. Also, just the general guidelines have become more strict. The nice thing about Cornerstone, we're a direct lender, but we're also a broker, so we work with other lenders. So if we have issues with insurance providers, we can go outside and look at other lenders that are available. So usually we can find a lender that will be able to accept coverage. And then just in general, with the insurance, I mean, the guidelines have become a lot stricter. So, what we're trying to do, and it's the reason I'm here today, is push proactivity for the buyers and or existing homeowners so that they don't run into any issues.
Yeah, Lou, you made a really good point, and it's not always at the top of mind of buyers, but it absolutely is going to affect not only the deal itself, but the bottom line. If you're looking for a house in the Oakland Hills, you might not realize that your insurance could be $1,000 a month, right on top of everything else. So it's not a top of mind, and it absolutely needs to be. ET, would you share with us what is one thing or a few things that homeowners don't realize that's actually affecting them negatively, that they could lose their insurance or that they're paying much higher premiums than they need to?
Well, there's a couple of things. The first thing is that we run into, and we really try to educate our clients or prospective clients. One is deductibles. You want to have a higher deductible. Never insure that which you can afford to lose. That's number one. And don't think of your insurance policy as something that covers everything. So sort of reimagine what you want your insurance policy to do. What we're finding is that people are coming to us, either they're buying new properties or they've been non-renewed because they've had multiple claims. Some of these claims are low dollar claims, 1,000, 2,000. But they've had some water losses that they put in they've put in a claim even though they've had zero payouts and things like that. It affects their insurability. So educating people, one, reimagine what your insurance is designed to do. It's designed to cover the catastrophic loss, not every loss. Therefore, higher deductibles will save you money. It's also going to help preserve your insurance. And so we love to try to educate folks about that, but it's an important aspect. Then the last thing is updating your home features, making sure that your roof is updated, making sure if you've got outdated electrical panels, they're easy to find. You Google outdated electrical panel, you get a whole list. These things are fairly easy to update. They're not really super expensive, but it can make all the difference in the world if your insurance is non-renewed for one reason or another.
And especially in the Bay, I mean, these houses in San Francisco, in Oakland, just filled with knob and tube and very old electrical systems and Yeah, the update would be worth the money for sure.
Absolutely. And just and one more thing along those lines is that we have a whole slew of people at our disposal. We belong to a business networking community that has architects, we have engineers, we have contractors, I've got plumbers, we've got electricians. We've got just a slew of people at our disposal that we can help and be used as an asset or a point of contact that we can pass that information along that will help people bring their homes up to current standards.
Yeah, very much so. And, a lot of people think, oh, well, so and so is a realtor or a mortgage broker or insurance guy, that they're only focused in their one lane. But the truth is we are an intricate network of folks who are here to be helpers. Before I became a realtor, I was not a connector. I'm a connector now. I know a guy. I know a lady. I know a person for everything. So please use all of us as resources because we very much team together to make sure that things go smoothly for you. Um, and speaking of going smoothly for you, ET helped me out. He helped a very close friend of mine out, but it's something that I've been seeing in this business a lot in the last year, which is policies being written at the time of a purchase, but then shortly after, whether it's a month or within the year, that same that same policy gets canceled for what seems to be no reason at all. And ET, since you solved the problem for my person, do you want to talk about that?
Sure. So I think it's really important. What we always try to impress upon people is that when the policy gets written, whether it's by us or somebody else, there's always a review process where insurance companies are going to they're going to use technology, they're going to use an app, they may send out third-party inspectors, but there's always a process after the policy is bound of inspecting that policy or that home or that property to make sure it meets their underwriting standards. If for some reason they find that it does not, there's an issue, maybe there's trees too close to it, maybe there's something going on with the roof, there's cracks in the walkway, whatever that might be, that insurance company can issue a cancellation. And so it's always important, one, to watch your policy documents, see, look at everything that comes from an insurance company, and two, to make sure that that home is going to meet eligibility. One of the things that sometimes people do is they buy a property and they say they want to make updates to it. I always advise people, do not start a construction project on a property that you just bought. So insurance companies, if you turn your home instantly into a construction site, I guarantee you're going to have a problem. But there's usually a solution. If you get something in the mail that says that your policy is being canceled for one reason or another, reach out to that agent, that broker who wrote it. If you can't get a hold of them, find someone else. But you have to take action. You cannot wait because you don't want to be uninsured or wait for a catastrophe to strike and find out there's no coverage.
So how long do they need to wait from the time they buy that property until they add that third level and add an ADU and all the fun things we want to do with our properties?
Well, you don't want to do anything in that first 30 to 60 days. You want to make sure that, everything goes smoothly. And then if you're planning a project, let the insurance person know. Say, hey, you know what? I'm planning on doing this or that, whatever. Maybe you need a builder's risk policy. Maybe you need to do something to that, either add to that policy, or maybe you need a supplemental policy to cover that additional exposure. But never leave your insurance agent or broker in the dark. Bring them in so that they're aware of what you're doing so that you can get the proper advice from the beginning.
And you're talking about permitted work, correct? Not just new countertops.
Big stuff. If you're doing small cosmetic stuff, no big deal. But again, don't turn it into don't make your home look like it's a construction project in the first 30 days. If you're going to do some cosmetic stuff, that's fine. But again, you don't want to have debris sitting out, outside your door. You don't want to make, it looked like there's something going on that's a major renovation.
Yep. Lou, do you want to chime in about anything you've heard so far?
Well, I've seen it. I've seen where policies have been canceled, and like, to Albert's point, you want to connect with your broker extremely quickly because that depending on what work has been done and the status of the property, it may take a little bit longer to get it reinsured. The banks generally give you 30 days, and then what they're going to do is they're going to go out and find insurance for you, and it's not going to be an inexpensive policy. It's usually a very expensive policy that the bank puts in place because they want to cover their asset.
Yep. And I know that there is an underlying fear for many people out there right now because here we are living in 2025, late stage capitalism, fires galore, all the things, right? So we're living in this really uncertain time. And I know that there are some folks who think that it is possible for insurance companies to leave California altogether and never come back. And then we'll never be able to buy and sell anything because insurance is required to own a property. And what the heck is ever going to happen to California? Does anybody want to chime in on that?
Well, I think insurance companies, I think insurance is always going to be available in California, but we have to think about insurance differently. And some of the rates that we see, I just had a call from a lady yesterday whose insurance said, "Oh, this policy doubled from last year," but last year's rate was extraordinarily low. And even against this year's rate, it's still very reasonable. The thing that people have to understand here in California, compared to other states like Florida or Texas, some of these other states that also are challenged with atmospheric issues or global warming, whatever that case might be, we have a higher exposure here to loss than in some of the other states in this country. But compared to some of those states, our rates are still very reasonable. In fact, I saw something the other day that between $300 and $600 cheaper than some of these other states. And so reimagine what the insurance is supposed to look like. And if you've got a significant increase, the first thing you want to do is you want to look at your dwelling coverage and make sure you have adequate dwelling coverage. The other thing is, what's my deductibles? I see a lot of folks still with $1,000 deductibles, $2,500 deductibles. By today's standard, for a high value home, if your home replacement cost is in the $2 million or $1 million range or more, you really should be looking probably at about a 2% deductible because you don't want to put small claims in on your home
That's right.
or your property, period.
Yeah, I'm going to talk about something that I know about but isn't fully my lane. So please, my insurance people jump in and make any corrections because the last thing I do is I don't want to look foolish around this. But another thing about making small claims is a lot of people don't know that there's something called a clue report. And a clue report is a lot like a credit report, like, TransUnion and whatnot, Equifax, but in the insurance world. So you put a claim on your house and you've gotten the claim and then you fix the roof yourself in a DIY project and pocket the money and go to Bermuda. They find out you may never be able to get insurance again, or at least the prices are going to be astronomically high. So we as individuals, as owners of property, have a report on us based on how many little claims we're putting in. And so it is important to not sort of nickel and dime our claims out. Do you want to talk about that, either of you?
Well, I had a situation where, some folks that were looking to buy insurance. They were looking at making offers on homes, whatever, and we ran the report, and it turns out these folks had 4 claims in a 5-year period. 4, 2 of them water losses, some of them very small payouts, and again, I think they put these things in because they weren't really educated about that very thing. Is that these claims are going to follow you to the next property, but it also affects the insurability of your home that you're in right now. So the prospective buyer is going to have to deal with the fact that you put in multiple claims on this home, a couple of them water losses, and it's going to be more difficult for that buyer to buy insurance. Secondly, you mentioned about taking the money and not making the repairs. The insurance companies are going to want to know what repairs were done. How was these losses remediated, or did they just leave the damage and not make the repairs? And so it all is, it's not something that you can just put a claim in and walk away from and thinking that it's not going to come back, because there is a record of that loss.
Yep.
I have a quick question for Lou. We were talking about deductibles. Are banks concerned about the amount of deductible on a property?
It's dependent on each institution, but in general, they are watching at the higher deductibles. I mean, as you mentioned, you want to have a high deductible, but there's a fine line and a balance that you work with your agent. Someone would work with you to figure out what that balance is and the correct amount so that it's not too high. What amount that is, it's hard to say because it depends on each lender. But that's the feedback that I've received.
Yeah, is there like a red line, like if it goes to say a 10% deductible or a 20% deductible? Is there a sort of a red line that most lenders won't cross?
That information, I've been trying to figure that out myself, so that I could help advise clients. But that's information that the lenders have not distributed at this point in time. So like I said, it's a fine line. You got to kind of test it. But usually, working with a professional like yourself, you have a pretty good idea based on the value of the home, where they can go with a high deductible.
Thank you for that.
Mhm.
Everybody here, please know you can submit questions in the chat if you have any questions. Jonathan, do you want to speak up about anything?
The only thing I was kind of going to touch on is when Elbert he mentioned the electrical panels. While it's a very big thing that all insurance carriers will need, not even just our agency. Once they do an inspection, those insurance or those electrical panels, sorry, will be flagged, but that doesn't mean we can't be proactive and start gathering quotes ahead of time. If, for example, if you know you're closing escrow in 30 days, but you know you have any of those bad panels in there, we're able to submit our applications under the basis that those electrical panels by the inspection will be replaced, and they have to be, otherwise, any quote or policy we have enforced will be voided or canceled. But there's steps we can take. We don't have to wait until those panels are replaced to start submitting our applications. They just need to be changed by the time of inspection. So in reality, as Albert was mentioning, within those 30 to 60 days of closing to not do any work, etc. If within those 30 days or 60 days after closing, if those electrical panels are replaced, we have had success with clients have had Federal Pacific stab lock or Zinsco and knob and tube to name a couple that have had them replaced while we were actively shopping quotes. And by the time the inspector came out, they were all good and all replaced. So don't let that necessarily be a deterrent and for your clients to not buy a property because of those bad panels. But it's very important that they do know to be proactive as soon as they can, or even, work with the seller to get those replaced as soon as possible for insurance eligibility.
Yep.
And just to tag on to that, we had a client who recently, for a condo, knew she had some outdated panels and got a quote from one electrician that was like $5,000. We hooked her up with an electrician that has been very helpful for our clients and able to get it done for $1,000. So you can't, don't think that one stop is, oh my God, it's going to cost so much. Not necessarily. It's not that expensive, and it may not be as monumental as people think to replace some of these things that are easily replaced.
Yeah. And I certainly wouldn't let this conversation stop you from moving forward in purchasing property, because on a very high level, one thing that we all know is turns out that in the long run, California doesn't get any cheaper.
Right.
So, it might be expensive to pay for that electrical panel, but paying rent in San Francisco for the next 50 years is also quite expensive.
Yeah, there's usually a solution. I recently got an email from someone who got kind of helping an older parent to find insurance and all that on a multi-unit building. And here is where the challenge is, and there's where Lou maybe can come in and can maybe help with financing. Old electrical, including fuses, galvanized plumbing, 30-year roof. Those are the things that you gotta, maybe work with a lender, a competent lender who can help with getting loans or some funding to upgrade those systems, because that's a loss waiting to happen. And these folks are being non-renewed, and the chances of them getting an insurance policy that's going to work for them is going to be very slim.
Yeah, I would agree with you, Albert. I mean, there's definitely options out there that are available to people if they do need to do a remodel or a rehab to the property. And I think just the overall message today is being proactive. That's the clients that I see that are coming in and are proactive. They're looking into the insurance, looking into multiple providers to start with, but have it top of mind. It makes a difference because the premiums can be a little bit higher than expected and can affect their debt to income ratio and qualification altogether. I mean, we've seen that quite often where they didn't anticipate the cost with the state of the market. So that's one thing that should be considered at all times.
Yeah, so just to tag on to that, so one of the things that we advise are, and we do quite a few of these every week and on a daily basis, are sort of pre-bid quotes. So if someone's looking to make an offer, we encourage people to start shopping for the insurance now. Look and see if, whether or not I can afford that insurance on that property. Don't let it stop you, but you want to be proactive in getting quotes right out front. And the beauty of it, if you're contacting us, we have your information in our system. So if this particular property doesn't work out for you, we're able to easily quote you on the next one. I've had some that's maybe it took 5 quotes when they finally got their offer accepted. And so, but it's easier on the next one. But definitely knowing what those costs are right out front is going to help you from understanding your loan to debt ratio, as Lou is mentioning, to make sure you can afford the mortgage payments along with the insurance, and figuring all these different pieces out.
Yeah. And there's something that we haven't fully covered, which is the high fire danger areas. People tend to think, well, you just can't get insurance there. And you can. You can get insurance anywhere in California, right? Am I right, Albert? Anywhere
You can
in
buy
California.
insurance. It may not be what you think or you expect or exactly to your liking, but you can buy insurance.
Yeah, it might not be at the price you want. It might not cover all the things you want, but the California Fair Plan has made it possible for everyone. And then you get a wraparound plan with someone like, or is it wraparound or is it a supplement policy?
We like to refer to it as a companion policy.
A companion policy.
A
That sounds
companion.
very charming. I like
They're
that.
kind of going together um, to kind of fill in the gap. So I mean,
Yeah.
the FAIR plan, and I think it's really important to note that the FAIR plan is the insurer of last resort. So it's not that say, oh, I've had people call and say, hey, can you give me a FAIR plan quote? So what do you need a FAIR plan? Well, because I heard that that it's better for me.
Nope.
Well, nope. It, there's a fair plan usually requires a companion to go with it to fill in some gaps, but it's also not their first choice.
Yeah.
We're going to look and do the shopping to see whether or not we can get you with either an admitted carrier, that's a carrier that is part of the insurance guarantee fund, or a non-admitted carrier. Those are our 2 choices. Sometimes if the admitted carrier, say Farmers or some of the other wholesalers that we work with, they don't have an admitted option. Sometimes there's a non-admitted option. If we can't get a non-admitted option, then the FAIR plan would be our fallback choice. But we do the research, we do the work to try to find an option for our clients.
Yeah, and this isn't a fixed thing we're talking about. Things are changing very fast within California in the laws and also in the industry. So what was only fair plan last week is now opened up to not being just the fair plan. And we're starting to see farmers and other insurance companies sort of back in the game in spaces that are hard to deal with.
I have. I mean, now there are some carriers, again, we're still getting cancellations from State Farm and some of the others who have decided they don't want to be part of the California market. But I find that I'm able to quote more things with farmers and some of the other uh, carriers that we have access to than we were able to do last year. And so I think there slowly but surely there's more availability, at least online, that we have access to.
Great, thank you. We don't have any questions in the chat, so I'd like to just take a round with each of the three of you. And if you'd just share the one thing that you wish you could have told everybody, if you could reach the hearts and minds of millions of people everywhere, what would you tell us about this topic? And we'll start
Let's start with John.
yeah,
Yeah. I think the biggest takeaway in terms of insurance, and a big thing to stress to your clients is to protect your insurability. I think the what that means is your insurance right now, especially is it's for catastrophic loss. If you have, a bike gets stolen in front of your house or something like and you're thinking about putting in like a 200 couple $100 claim, I would call your insurance agent first, and I would strongly advise against that, because in the long run, if you submit one claim, next year you could get canceled or you can be non-renewed, and your insurance rate next year could be double, triple that price. And we have a lot of clients who come in and say, why is my insurance? If they come from other agents looking for quotes, and we say, hey, like this is the rate we saw that you put in a claim X amount of years ago. And that's affecting your insurability. And they said, well, if I knew at the time, I wouldn't have put that in. And so that's a very important thing to educate yourself, but also for your clients, to know that not putting in these small claims is really beneficial to you in the long run. And people are like, well, then what do I have insurance for? It's if you have a $50,000 damage to your roof, a tree falls on it, obviously, yes, put in a claim. But as Albert kind of mentioned earlier, is to don't self-insure for what you can afford, and if you're able to eat the cost of that bike or whatever it may be, um, it will help you in the long run, and it will protect your insurability and keep your rates as low as possible. But the biggest thing is to talk to your agent first, let them know what's going on, and to piggyback off of that, these claims, they stick with you for 5 years, and so that is a long time. And even if it's just one claim for some of our carriers, that's more than enough for them to say, hey, you're not eligible. We're gonna have to shop you somewhere else. We might have to go to a non-admitted market. So it's very important to kind of pick and choose the battles you want to fight with the insurance company, and kind of what kind of claims you want to put in. So I think it's very important to have a good relationship with your agent, and talk to them first before you move forward with anything.
thank you very much. Lou?
Well, again, I go back to just being proactive. I mean, gone are the days where you can just go walk in, buy a house, and get your insurance throughout, during the process, the underwriting process. The clients of mine that are successful are the ones that are working with professionals that are advising them and advising them to look into the insurance. If you're selling a property, to do what Albert said, is make sure that everything's been is up to date, so that when you sell it, there won't be any potential insurance issues. With lending, it gives us an opportunity to go out and shop the market for lenders that, you mentioned fire areas. There are lenders that will lend it in those areas, and that haven't ever stopped lending in those areas, but people aren't familiar with that because they've gone to maybe a major bank, and the major bank has said, sorry, we can't help you. But doing your research and having a strategy is where I'm seeing success, because you can identify potential roadblocks, overcome those roadblocks, have your insurance in place, and then have your loan in place, and know that the affordability is there for you from a monthly housing obligation. So really what I advise people to do is just be proactive check the boxes ahead of time before you go out and start searching for a home.
Thank you.
Yeah, just to kind of piggyback on that, just to some of the folks that are maybe in higher fire zones, some of the areas that you were talking about, Wendy, is fire hardening. There's a measure going on in Berkeley where there's some pushback from some property owners over there because of the aesthetics, they're harming the aesthetics. But having a 5-foot defensible space around your property is critically important. Also, if you're thinking about changing your roof, think about if you're in a high fire zone, putting on something that's going to be fire retardant, something that one is going to help your insurability and survivability in the event of a wildfire. So it's a big thing. I hear the governor's pushing it as part of the insurance commissioner's sustainable insurance process. And it makes a big difference whether or not an insurance company is willing to offer you insurance or not. Now they have programs that they can literally see, what trees are around that property, where, what the accessibility is for the fire trucks to get in there. All of these things matter. And so being proactive to enhance the survivability of your home in a high fire prone area is critically important. I know, and even Marin County, that's something that they're going to be pushing. And so I would say those are the things: loss prevention and looking at not putting in small claims on your property.
Yeah. And there is in fire defensibility particular feet, right? So there's the 5 feet, there's 10 feet, there's 30 feet, there's 90 feet.
Mm-hmm.
If you're clearing, and if you look up what should I do in those, but for time, I won't tell you each of the steps and what you need to do in that space. But what we've found is you have a 90-foot around your house defensible space for fire, very little chance that it's going to actually take out your structure if you've got a full 90 feet all the way around of clearing. And most people, because of aesthetics, just aren't willing to do it. But I've noticed even up in the mountains, they're taking their deep breath and glad they're on acreage because all their little woods is going to be further out on their property and not right around their house. Because yeah, it's not as pretty, but also you get to keep your house. Yeah. So the thing I want to end with was I bought my very first house in San Francisco in 1992, and I paid $210,000 for a two-story Victorian. That is the power of buying in California, right? Bought it in 92, sold it in 99, doubled my money, and today that $210,000 sweetheart of a row house of a Victorian is worth over 2 million. And the one lesson I have learned in all the years in our beautiful Bay Area is it doesn't get cheaper. People are afraid to invest. I would be afraid not to. Yeah. So I'm going to send the recording out to everybody who registered. Feel free to pass it along to people if you thought it was valuable. And I will also put all of our contact information in that email with the recording. And I hope you got value out of being here today. And thank you for everything you did to be here on this meeting, for all of you, and all the things that you didn't do in the last hour to be here. So I really appreciate your time. Anything?
Thanks everybody. Thank you, Wendy, for hosting this, and we appreciate everyone registering for the event and able to attend.
Thank you so much, everybody.
Thank you. Thank you, Wendy.
You bet. Take care.